Let's put that here. Let's make that big here. Let's bring that back. Let's go ahead and share. Got that. And last but not least, we got that. Good morning, everybody. Good morning, good morning, good morning, and happy Thursday, happy Friday Eve, as one of our coworkers likes to say. Good morning, everybody. We'll be starting in just a minute. I hope everybody's doing great today. Hope everybody's having a fantastic morning. Let's say hello to everybody. Omar, Richard, Dave, the sassy trainer, W. Wong, Dr. Serena, Armulfo, John, Dave, Tom, David, Dennis, CJ, Charlie. Good morning, Charlie. Robert, Wade, Vernon, Timothy, Ivano, Jody, Roddy. Good morning, Jody, Roddy, Ivano, Timothy, Thomas, Heather, Devin, Robert. Good morning, Robert. Eduardo, Brian. Good morning, Brian. I'm going to give Matt what you send me today. Glenn, good morning. JB, Ben, War Dog is in the house. Yay. Blair, Anthony, Darren, Brian, Manuel, Sarah, sorry, not Star, Sarah, Kevin, Ray Star, Jesse, Chris, James, Deanna, Michael, Henry, Randy, Frankie, Samson, Ralph, Dave, Terrence, Jean, Eagle Beagle's in the house, Tim, Scott. Hey, Eagle Beagle, I got some stuff going on with China today. We'll talk about it, and Japan. Interesting stuff going on in China and Japan. A Keekhawk fan. Wow, in Manila. My goodness gracious, that's far away. Howdy, Scott. Hi, howdy, Tim. Howdy, Dave. Scampy. Good morning, Scampy. Tony's in the house. Yeah, no problem. No problem. My pleasure. Jeff, good morning. Robert, good morning. Art, good morning. Edgar, good morning. We'll be starting literally in a minute. Just want to give the room a few minutes to fill up. As you can see, the market is a little softer today. It's not a big surprise. I warned you guys yesterday that we're getting near some interesting levels, and we may see some consolidation. It's not a big surprise, but we'll talk about it in the morning. Hey, Cam. Hey, Rosalind. Hey, Colleen, Edgar, Art. Short Bidu, so we shall see. Well, that's more China. That's China. Justin, Robert, we'll get more thumbs up. Folks, post a thumbs up, click a thumbs up, and click the bell. It's in the YouTube. It's not on your Zoom or whatever, or it's not. So I know a lot of you are clicking and watching this in Telegram. If you actually go to YouTube, you will find the thumbs up button, okay? So just go from your Telegram to the actual YouTube channel and watch it and post the link there. All right, now I got something really important today. Something really, really, really important today that a lot of you have been waiting for. So I have a strategy. It hasn't been defeated yet. That's right. It does not have a single loss since we launched it back in July. Let's see. July, August, September, October, November, December. Huh. You haven't had a loser in 6 months? No, we haven't had a loser in 6 months. We've gotten 22 or 23 trades without any losers. Matter of fact, my biggest problem is I can't calculate my profit factor because I need to have a loser to calculate my profit factor. If you started with $5,000, you would have had over $16,000 right now. You would have had over a 200% return or 300% gain on your money. All right. Nice, Scott. Nice. Very nice. I would say if this is not life-changing, I don't know what is. Here's a link for that. Folks, the A-line is coming out today at 2 p.m. And yes, I will have some trades for you as well, which I wasn't even supposed to. So the A-line is going to be on today. It's going to be on at 2 p.m. If you miss out, you're being foolish. That's all I'm going to say about that. Because we haven't had any losers since we opened the program. Is there anybody who is in the A-line program who has taken a loss since we started? And I want to ask you another question. Have you had a program that you started since before summer that you haven't had a loss in? Let me know. I'm curious. I'm curious. Good morning, Benjamin. Good morning, Rich. Good to see you. Robert says, love the A-line. So again, here's the link. It's happening at 2 p.m. today. And to say it's life-changing, I don't know what else, because having no losers is life-changing in 6 months. All right. And I'll be in my VIP room today at noon as usual. Okay? Yep, not one loss in the A-line. How many programs can you say that you bought more than 6 months ago that haven't had a losing trade? That's all I'm curious about. And I'll go through it and I'll go over all of that. And again, the purpose here is not to promote this, but I just wanted to give you a heads up. Also, good, Dom, good. And also, here's a link for Customer Service Live, the Cam and Gustavo show. See, Jesse says no losses on A-line. Yeah, no losses. Good morning from chilly Seattle. Ooh, yeah. All right, so let's get into today. Now, remember what I was really focused on yesterday. Do you guys remember what I was focused on yesterday? The bond market. I was really focused on the bond market. And what was I telling you about the bond market? I was telling you that if we start selling off, it's going to put pressure on the gold market, and it's going to embolden the US dollar, right? Maybe our mofo. I don't know, but people love the A-line. They love my A-line. We haven't had any. All I could say is this: it's a program we haven't had any losers yet since we launched it. If you know of a better program, if you know of any other program that hasn't had any losers since launch, and we launched it last summer, raise your hand because I don't know of any. Well, yeah, I do. Stealth Surge. Actually, I do. Stealth Surge. I love when a plan comes together, in which I didn't have a winner. I bought a program, not my program, Rice. Darren said the A-line is the only program I have. How about Stealth Surge, Darren? How many losers have you had there since summer? Anyways, that's all good stuff. It's all good stuff. Let's get into this analysis. I got a lot of stuff to talk about today, but let me just post this testimonial. This is a good testimonial. All right. Good morning, Keyhawk fan. Missed exit. Good morning, Rochelle. Good morning. So again, here's the link. Join me at 2:00. Do not miss out. It'll be worth your time, I promise. And I'll be giving some freebies as well. All right. All right. Stealth Surge. Yeah. So today we're going to talk about A-line. So remember the 3 stocks. What was the first stock on my short list yesterday? What was the first stock on my short list yesterday? Do you guys remember? Let's see if anybody remembers. Let's see. Does anybody remember what the first stock on my short list was yesterday? You guys should keep better notes. Remember? Yep. Right here. Circled right there. My first short. This is my list from yesterday right there. You could see it right there. Right there. Lennar. All right. Yeah, they were paying attention. Oh, yeah, I forgot. There's a delay here. There's an 8-second delay. No, it was Lennar. It was Lennar. No, it's literally the first one on my list. I gave you Lennar, DHI, and Kaufman and Broad. I gave them to you together. First stock was Lennar. All right. Don't mess around with me. It was Lennar. It was LEN. Okay. And we have a nice breakdown on higher volume. Why? Home builders. Remember, I had a whole big thing about home builders with you yesterday. We were talking about how interest rates go higher, how if I told you how if the bonds break down, it's going to put pressure on these stocks. These stocks were already at a turning point. That's right, Scott. Yes, they were good. I know you did, Rich. I know you did. I'm not worried about you. I'm worried about everybody else. So look at where we're at right now. So yesterday, what did we do right after the report CPI came out? We rallied a little bit. We stayed firm. But what happened after the market opened? The bond market crashed and burned. Look at the long bond. We're now below the 50-day moving average. We're now below the quarter-day VWAP. We're actually below the election VWAP right now. Look. Okay? Yeah, me too, Darren. Me too. I did like Lennar best. I did because it was closest to the pivot. It was. Hey guys, I got a solution for you. Everything is recorded. You can go back to the tape. Okay? Let's not argue about this. I'm not going to make an ass out of myself and lie to you. I mean, I literally have it as the first one on my list. Okay? So we're now below the VWAP. We have the PPI report coming out. Now, just to show you again, I don't want to get, I don't really want to get, I don't really want to get too deep into this because I'm going to get really emotional. I'm try, I'm trying to conserve my emotional energy so that I could put all my focus into trading instead of arguing with you guys. I don't want to do that anymore. All right. So year to year, look at what we're expecting. This is a year ago. Okay. Now, most of you guys know that this is PPI. CPI was not better than it was a year ago. It was exactly where it was a year ago. Okay. So let me ask you an interesting question. Let me ask you an interesting question. Penny, what did Penny say? Good morning from Jacksonville, but I have to leave short. Oh, you got me all excited, Penny. You could have come to my office and hung out with us. Penny, next time come a day early and hang out with me and Matt at the office. That's not cool. We should have come over here. I hope the knee goes well, but next time come out here, okay? Good luck to you, Penny. Mayo is amazing. It's like 15 minutes from my office too. I did. So let me go back in here. So let me go back here. PPI, okay? This is producers price index. Now, most of us know because we're adults and we've bought things before and we know how basic economy works. And again, I'm not trying to talk down to you. I'm just trying to explain it to the most common denominator. Producers push their higher prices to consumers. That's just how economics 101 works. If producers pay more, consumers pay more. Now, yesterday, and again, this is really obvious what I'm saying right now, but I'm trying to keep it simple. So you saw that yesterday, look, the numbers were no better than they were a year ago, right? This is the consumers, okay? Consumers. Today, we have producers. The producers price index is not equal to what it was a year ago, okay? All right. All right. Look what they're expecting. A year ago it was 2.2. Now they're expecting 2.6. That's the expectation. That's what's baked into the market right now. Food and energy, 2.2, 3.2 is baked into the economy. And this one, I don't even know what they're expecting, the ex food, energy, and trade services. I don't even know why they have to have this one. But my point is, let's say we come as expected, right? Let's say we come as expected. Ah, I got you, Penny. I got you. Next time, please, I want to see you. I really want to meet you in person. Take a couple of pictures with you, put them on my wall. I have a cool wall of pictures at my office. It's nice. We have a nice place there. You can participate in my VIP room if you want. So anyway, you see how the expectations are worse than they were a year ago? So my question to you is real basic. If producers are going to pay more than they did a year ago, can you please explain to me in what world inflation is getting better? Yeah, I mean, I'm going to leave it at that. I'm not looking for an answer because I don't think there is one. But in what planet, in what universe did inflation get better? Can you please explain this to me? Okay. So don't, to me, we're going backwards. Okay. And it's just a matter of time till the Fed realizes it. And the bond market is already realizing it because when the Fed lowered rates right here, what did the long bond do? It went straight down. And when it had a chance to rally again, right here, what did it do? What did it do? It just broke down. Couldn't make it to the 100-day moving average, broke the 200. Okay. And now we're below the election VWAP. So anybody who bought from this point forward right here is losing money right now in the bond market. Okay. So again, it's Adobe beats on revenue and EPS, but tanks on guidance. Yep, that's right. Yeah, exactly, Cam. Mark says, can someone please explain how coming in as expected makes the market explode up? Can't wrap my head around it. Send me an email. Send me an email, Mark. Roger@rogerscott.com. Okay? All right. All right. So be careful here. Be careful because this increases yield and this puts pressure on interest rate sensitive stocks. Okay. And might have saw yesterday what happened to the Russell after it huffed and puffed in the morning. It cooled off. It cooled off quite a bit. That's okay. That's all right. So again, I'm very cautious about anything relating to interest rates right now. Very cautious about anything relating to interest. Very cautious. Gold market. Well, as I mentioned before, with the bond market down, gold was sheepish yesterday. It's not breaking out higher. And you see this red line? Remember what I told you? Don't buy gold till we're above this red line. And I want to see some volume too. So far, if yield continues going lower, it's not going to happen. Okay. What about the US dollar? Well, the US dollar is getting some firepower from the bond market. This is giving it some firepower. So the US dollar is coming up. What about crude oil? Nothing. Came down here again. Now we're coming up. We're at the red line. We're at the 50-day moving average. We're at the quarter year VWAP. The odds are we're going to peak out right here and then just come right back down. I was actually looking for an iron condor on an energy related asset yesterday. If there was no volatility. So you're correct, but if we are going backwards, the results could be harsh. Yes, Carlos, the results could be very harsh, especially if President Trump does. Now, here's my opinion. I think Trump is full of it. He's not going to do any tariffs because Kevin Hassett is going to explain to him Basics Economics 101 and explain to him that it's going to be really bad for the country. And it's going to be really bad for the economy. And President Trump does not want to screw up the economy. That's the last thing he wants to do. So I think that's going to go in the toilet. Now, what does the market think? The market believes we're going to have tariffs, and the market's pricing in for that. See how I separated what I think versus what the market thinks? What I think doesn't matter. What I think doesn't matter. You know why? Because the president of Dollar General, of Dollar General, the store, he's going around right now saying if this is going to go up, this is going to go up, this is going to go up if we have tariffs. And the market is reacting to that. Okay. So again, I'm trying to separate my point of view from what the market's point of view is and explain to you that my point of view is irrelevant, just as your point of view is irrelevant. We only care about sentiment, and that's what the market's being driven in right now. So we have to be very careful. But yeah, I think ultimately we're not going to have any tariffs, and I think that Trump and Hassett are going to have a little come to Jesus talk with Powell. And I think Powell is going to stop lowering rates because we don't need that right now. But we're not there yet. So I have a personal opinion and I have the market's opinion. And they're very different from each other, as you guys could see here. Okay. Scott, did you just hear what I said? Did you miss what I just said, Scott? I hope you just heard what I said. I have a personal opinion, and then there's the market. They're completely different. If you follow your opinion, you're not going to make any money in the market. Okay? All right. So yeah, but Carlos, you're 100% correct. It's a big problem. It's a big problem. And I'm hoping that it is just a negotiation tactic, and that's what I'm hoping for. But that's not how the market's reacting, unfortunately. All right, China is doing nothing. We're still below the 50-day moving average, and we're right at the 8-day EMA right here, right at the 8-day EMA, and I think we're going to come right down to this level right here. Actually, I need to reduce. Yeah, I don't even know why I put it up there. Right there, there it is. You could see it right here. That's the channel. I think we're just going to be gliding in this channel. As they promise more stimulus, we're going to come up. As it doesn't happen, it's going to come down. And eventually, we're going to break this red line, which happens to be right at the 100-day moving average, and we're going to go all the way to the 200. Yes. Woo, look at that, Dr. Serena. 420 minutes. Love it. Speaking of which, guys, for anybody who's coming in here right now, I am going to have something of my own today at 2 o'clock. I'm not hosting anybody. I'm going to be talking about a program that's given us 22 winners in a row since we started. It's the only program that hasn't had a losing trade yet. All right. All right. So that's happening. Michael, I'm not squibbling or anything like that. I'm explaining to you the difference between what I think and what the market thinks. I'm not squibbling with anybody. There's nobody's squiggling. Nobody's arguing about anything. If you started again with $5,000, you would have had $16,500 between now and June, and we haven't had a loser since we started the program. So I can't calculate my profit factor. That's the best problem you want to have when you're in a program where you can't calculate the profit factor. What's your win rate? 100%. What's your profit factor? I don't know. I can't calculate it. I have to have a loser to calculate it. Oh, I'm sorry, Michael. I thought you were referring to me. I thought you were referring to me. I apologize. You said Scott, so I thought you were referring to me. I apologize. I'm so sorry. I apologize. My fault. You're right. My fault. Okay. So join me there. And also, I'll be in the VIP room. Now, I've got some really cool stuff that I'm going to be talking about in the VIP room today. I'm going to be talking about analysis paralysis. How many of you guys have analysis by paralysis? Okay. Do you guys know what analysis by paralysis is? It's when you do your research, you find the perfect trade, and then you're too fearful to execute it because you think you second guess yourself. All right. I'm going to be talking about that today in the VIP room. If I had to guess, I would say about 90% of people suffer analysis by paralysis. Okay. It's not uncommon for people to have it, especially after they have a couple of big losers. They get shy about their trades. Okay. So I'm going to talk about analysis by paralysis. Okay. Also, I'm going to Cam. I'm glad you're here. Um, Today, at some point, Matt will reach out to you about the alerts for the 8-day EMA and the VWAP. Okay, he's going to reach out to you sometimes today. He already made a video, and it's already in the members area, in the VIP members area. But he wants to make sure you understand it, and it's all kosher. If you don't mind, would you mind watching the videos he made? They're like 2 minutes long before he reaches out to you. Thank you. Okay. I want everybody to be prepared, and I don't want to have any surprises here. I suffered from that during my market ignorance stage. Yeah, it's very powerful, and there are techniques we can use to mitigate it. Okay, so I'm going to be talking about today. Also, I didn't have a chance yesterday to talk about when to do a debit spread and when to just buy a call or when to just buy the stock. I'm going to talk about that today. We're starting to hone in on skills that you really need to have as a trader, not some theoretical skills, but things you really need to have to execute the trades. I'm trying to get you guys over that bridge, like setting alerts, like getting your workstation together, like having a plan where you can have a continuous plan. So we're going to talk more and more and more and more about that. Okay. How about, yeah. Hey guys, how about some likes? How about some likes? How many likes do we have? Let's see here. How many likes do we got? We got 146 likes. We should have at least 200 likes by now. So post a like, and here's Customer Service Live. Cam, let us know what you're going to be teaching today. Here, let me get a link for you, and we'll continue this exercise. Good morning, Wayne. Welcome. All right, so China is not giving us any tailwind. Crude oil is very choppy. US dollar is getting firmer and emboldened because the bond is going down. Keep an eye today on the bond market, folks, and on volatility. Remember volatility, our friend volatility? And by the way, there's going to be a report in 5 minutes, okay? So let me turn on my TC 2000 so we're ready for it. Love my TC 2000. All right, here we go. I just want to turn it on so we have it on in anticipation of the report. Okay, here we go. Getting everything nice and ready, putting on the bond market here. This is where we're at right now. We'll see what happens in a few minutes. This is the 5 minutes, and this is the daily. And I don't like the fact that we're below all of the. Look at this, guys. We're below the 15-day EMA, the 8-day EMA, the 50-day EMA, and the 200-day EMA. And I don't even have my VWAPs here. All right. If I was to set my VWAP to the election, we would be below that too. So, as a matter of fact, what was the election? It was was it right here? Right here. Let me set it. See that? Right there, right now. What is it? Let me double check. I'm not crazy here. Yeah, right here. Yeah, right here. What day is this here? Yeah, the 6th, right here. All right. So we're literally right there. We're literally right there. So let's watch it closely. So, volatility. Remember what I told you guys yesterday. If volatility starts creeping up to the 15 level, we're going to be in deep doo doo. Volatility went about halfway and then broke down. We're now in a safety zone. Keep in mind, the market right now is down a little bit, not a lot, but everything is down. Everything. We don't have one sector up and one sector down. And we had earnings from Adobe, which did not please the market. Okay. We also have Costco after the market closes today, and we also have AVGO. AVGO. Ooh, nice camp. AVGO. That's right, Jeff. It is. You're absolutely right. AVGO is a very influential semiconductor stock, so we're going to have to watch that very, very carefully. All right, let's put everything together as the report comes out. Okay, so to summarize this part so far. Oh, nice. Oh, that's nice. Nice. Alex coming in. That's cool. Yes, I'll be joining you on the 19th. That's right. So you're going to be watching CBOE, VIX, dollar sign VIX. If you're using TC2000, the that's VIX dash XX or just X. Okay, that's what it is. Dollar sign VIX is VIX double dash X. Okay, just letting you know. If you're using TC2000, it took me a while to learn that myself. We'll be on the road today. Congratulations, Gustavo. Congratulations to you. That's very cool. Very cool. My son's about to start vet school, probably in Australia. Don't get me started. Kangaroo doctor. So be careful. The level you want to watch is 14 and then 15. Be careful here. But this will set the tone for the day, okay? Now let's talk about putting everything together, and then we'll be interrupted by the bond market as the report comes out. So far, nothing. Treasury yields marched higher, not good for anything relating to the housing market, real estate, consumer staples, not really good for consumer discretionary, but it doesn't seem to be moving them at all. As a matter of fact, the three sectors on my watch list right now are, let me give them to you. You definitely want to watch these very closely. Is retail. I'm watching retail very closely. I'm watching communications very closely. XLC. Look at that. And I'm watching XLY. And so far, the interest yield has not been impacted by these at all, which is really interesting, I think. All right. So those are the we're waiting for PPI report to come out in about a minute. Watching the bond market. NASDAQ notched a new record high. All right, there we go. There's the bond market. The bond market's reacting right now. So something's out. Hmm. It's going higher. Here, look. Something's out. Let's see. We'll just keep reading it. And if you guys know what the numbers are, let us know, okay? Meanwhile, we'll just keep reading this. But keep an eye on this. This is very influential. This is one of the most important chip stocks, and it's coming out after the close today. And so is Costco, okay? Big, 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 big numbers. Nice, nice. My best friend went to chiropractic school 30 years ago, but NASDAQ 100 information reported that Apple was working with the chip maker, that's AVGO, on a server chip exclusively designed for artificial intelligence. This is really important. This can be a major catalyst for chips and AVGO. So keep an eye on this today, and don't go hot and heavy into semiconductors before the end of the day today, okay? All right. All right. The numbers came out. Let's see. I mean, we're already expecting crappy numbers. Jesus Christ. I'm sorry, I didn't mean to say that, but oh man, this is not good. Oh, Powell's going to be in a nice little pickle after this. So look at this. A year ago it was 2.2. They were expecting a worse number and they just got 3. Ooh, my dogs are going crazy. They don't like it either. So let's see. What about X food and energy? I got to know what this number is. Let's see. I mean, I need to know what this number is, but so far the bond market is not moving higher at all. Not really doing anything. Look, just kind of sitting there. But this is not a good report. I'd love to see how he's going to spin this one. I love to see how he's going to spin this one. Yeah, it's horrible. Does anybody know what the X food and energy number is? Aha, here we go. Oh man. Woo. Oh yeah, 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 yeah. This is a stinker right here. Now, next time the Fed tells you that inflation is getting better, just show them this, okay? This is horrible. Look, 3.9, 3.4. Not only is it bad, it's worse than they were. It's okay. So not only is it worse than a year ago, it's worse than they even anticipated it was going to be. Powell will tell us yes, we weren't wishing hard enough. Of course, let's osmosis, guys. Let's, if we all think if we all think inflation is going to go down, it's going to go down, right? I mean, that is what Powell said. Yeah, we're not moving up at all from this. Mm. Let's see what the SPY is doing. SPY is not liking this. Not really hating it either, but look, just kind of sitting right there. That's why I told you guys be very, very careful going into today. Remember, Rich, what I was telling you last night? Be very, very careful going. This is shit. This is bad. This is really, really bad. This is about as bad as it could be. Not only did they not meet estimates, but the estimates were worse than a year ago. So next time Powell keeps telling you his nonsense, let's just all tell him to shove it up his you know what. This is bad. This is bad. This tells us that he had no business lowering rates. Okay? Enough of that. Yeah, the kid needs to return his bike. Well, that is what happens when you don't kill inflation. They have an underrated. Yes, I agree. I agree. What a right, Eagle Beagle? He insults his own intelligence, but he doesn't have to insult ours. Thank you. Inflation on the rise means interest rates needs to go high. Yes, Mill. Yes, yes. Now you guys are getting it. Now everybody seems to be on the same page as me today. I love it. Sometimes I'm here with you guys and I feel like we're in a different room. Today, I feel like we're all on the same page. We're all saying exactly the same thing. This is bullshit. This is bullshit, okay? This is bad. Not only is it worse than a year ago, but it's worse than a year ago based on their expectations. All right. Tesla gained more than 5% yesterday. NVIDIA, that's what gave us a lot of tailwind yesterday. A lot of tailwind. Yeah, the SPY is not loving this. Let's see. Bonds are just sitting there. Basically, the market is not reacting off of this. But remember yesterday, the market reacted positively after the report came out. And then what happened when the market started? Broke down. We're right at that VWAP right now. Look at that. I don't like this. I don't like this. I have not earned the bike analogy for a while. As in the past with inflation, we have a second wave. Yep. 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 Yeah, Jeff. Because well, think about where does the CPI come from? From the PPI, right? If producers are paying more, do you think consumers are going to pay less? Hey, let me ask you guys, have you ever seen the producer not pass it on to the consumer? Have you ever seen the producer not pass it on to the consumer? I haven't. Have you? Forget about the stock market. Just think about common sense. Have you ever seen a producer eat it and not pass it on to the consumer? If you have, well, you have a different experience of reality than I do. All right, all right. I'm not gonna get too worked up over this. I have a long day today. So on an annualized basis, headline inflation picked up to 2.7% in November. This is the CPI. Basically, things were not good. The debate for the FOMC next week will be between cut or skip is over. Inflation print should be risk asset friendly and provide tailwind to equity markets as we move through one of the strongest seasons. I mean, this is nonsense. 98% chance they're going to lower rates. Now they have to. They don't have a choice. PPI is what we're looking at. We already know the number was shit. Initial jobless claims that nobody even is caring about or looking at is out. But let's take a look. Yep, not even worth talking about. It's getting worse, but this is look, the 4-week moving average is still at 224,000. So it's getting worse, but this is a nothing burger. Watch, they're going to shift focus to this instead of talking about what really matters, which is this. Okay. Yeah, so this is bad. This is bad. This is not good. Your turn. I like that, Dave. That's funny. Uh, we're getting a rate cut, but not because of this, because they can't say. Okay, so here's the problem. Here's the problem. Powell, so let's say Powell comes out tomorrow and says, we're not lowering rates, or next week, we're not lowering rates. Let's say he does that, okay? Let's just say he does that. People are going to be like, then why did you lower rates half a basis point 2 months ago? What changed? So for him, let me explain to you what he's in a pickle right now. For him to not lower rates would mean he would have to take a hit for lowering rates 2 months ago. He's got way too much ego for that. He's not going to say, folks, we screwed up. We decided to wait for 4 years and not to take any action. And then we took aggressive action only to walk it back 2 months later. He's not going to do that. He's going to play it off and he's going to keep lowering rates. We're making progress, and he's going to lower rates again because he started something. What I was saying was he shouldn't have started lowering rates till the election. Then he would have more data. If he had this data, he probably wouldn't have lowered rates, and the bond market would still be up somewhere around here because everybody would be speculating on what's next. But does he listen to me? No. All right. So again, this is bad. This is bad. Let's continue, and I got to get out of here soon. So Europe is up just a fraction. They're all keying off of US. The US stock market right now is just kind of downish a little bit. Europe is down a hair. Investors are gearing up for the European Central Bank policy. Energy stocks outperformed on Tuesday. Energy stocks. China exposed mining and luxury stocks also advanced after Chinese Commerce said that China is open to contact and communicate with Trump administration. This is good. That's good. It's not great, but it's a good start, but it couldn't really drive us anywhere. Let's continue. But this is good. I like seeing that. China closed higher today. No, they didn't. Continuing its upwards. Do you see this upward trajectory right here? This is the top 50 Chinese stocks. Continuing its uptrend driven by expectations of additional growth measures. No, they're not. Liquor stocks led the gains on Thursday. Investors now waiting for Chinese two-day Central Election War Conference, blah, blah, blah. This is China. Does it look to you like China went higher? It's up 0.03%. Okay? Not a big thing. And let's continue. Japan closed at a 2-month high. I like that. Tracking overnight gains on Wall Street. Bank of Japan's monetary policy, Eagle Beagle, remains uncertain. Bloomberg reported late Wednesday that their officials viewed a little disadvantage in delaying interest rate cuts. So they're actually controlling their economy with interest rate cuts, where U.S. is not. See, little disadvantage in delaying interest rate cuts. Well, Powell's not going to do that next week here. Too much political ego. Watch Adobe. They issued below consensus guidance. As everybody here knows, the worst thing a company can do is downgrade themselves. Even though they beat expectations, they downgraded themselves. They gave themselves a bad report card. The biggest sentiment for stock is a downgrade when they downgrade themselves. T-Mobile is also down a little bit. This is not going to help communication sector today. Well, that was the plan about 18 years ago for either Glassman, Calamiris, or Hassett, the three amigos, to replace Greenspan. But it didn't happen. But that would have been cool. But that was the plan a long time ago. Maybe in the next 10 years, Kevin. He's still young. He's only about 10 years older than me. He's not old. Or maybe, no, he's like 8 years older than me. All right. Folks, remember something. The U.S. stocks are going down. Bond market is just kind of sitting there, not really doing much. Remember, folks, this is big. I'm going live today at 2 p.m. with the A-line. 22 winners in a row. Here's a link for that. It's the best thing I can offer you. I will be in my VIP room at noon today. Here's the link for that before we move on to stocks. And here's a link for Customer Service Live, where they will answer all of your customer service related questions. All right, let's move on to charts. So volatility, I'm expecting volatility to creep up a little bit, especially the first hour or two of the day. My suggestion is not take any action today till at least 10 o'clock. Yesterday, the bond market was pretty springy, and then it fell apart as the day continued. I'm hoping that will not happen today. But yesterday, the bond market fell on its face. And remember, we're right at that VWAP right now. We're right at that VWAP, that election VWAP right here. If we break the election VWAP, we're going to go down here. So watch this closely and watch volatility today. Volatility seems to be okay, not really reacting to this. Let's see if, futures are. Futures are not reacting kindly. This is futures volatility right here. Futures are not liking this. Folks, you should always check VIX VXX versus VIX/XX. One is looking at cash, at the money, and one is looking at futures. Very, very different. One is telling you what's happening. The other one is telling you future expectations. All right? Folks, hit the like button. Hit the like button, okay? All right, how is momentum level looking today? Well, we actually have some pretty good firepower to the upside. Yesterday we didn't, but today we do. And we actually have some decent firepower to the downside too. Nothing crazy, but we're starting to get up there. We have some volatility. Going into yesterday we didn't, but today we do have some volatility. We also have very, very strong trends in XLC, as I mentioned to you, XLY, and XLT. XRT in retail. That's what's driving the market. And what I'm hoping for is that will continue driving the market because those are the most powerful three sectors for the consumer economy. What I'm hoping for is the bond market doesn't go lower today and puts an end to the rally. I love this rally we're seeing in retail right now. All right. Thank you, Eagle Beagle. A-line is mind-blowing. Thank you. Well, that's a good testimonial. The best testimonial is, how many losers have you taken since we started the program? And the answer is, we haven't taken any, Roger. We started it last summer, and we trade every week. Do you have a program that you haven't had a loss since last summer? It's almost funny saying it, you know? It really is. Let's just push this here. All right. Hit the thumbs up button, guys. If you're on Telegram, go to YouTube and hit the thumbs up button. We only have, let's see how many thumbs up we have. We only have 218 thumbs up. Come on, guys, you can do it. All right. So we have firepower. We definitely have firepower to the upside. It doesn't seem like the bond market is reacting at all. As a matter of fact, the bond market is now cooling back down. So the bond market's not really reacting. Stocks are a little softer, but not as much of an impact as you would have thought. Yes, they're all options trades and underlying. We give you the underlying and we give you the stock. So both. Yeah, and it's a swing trading program. Okay. Hey, Brian, I hope you're doing well. So, what about, so momentum is looking good. What about fragmentation? Do we have fragmentation? Let's take a look. Consumer discretionary, Bitcoin, communication, QQQ. By the way, communication was down. Now it's back up and retail's here. The only problem I'm having is with semiconductors and technology. The reason technology is down here instead of up here right now is because of semiconductors. Because hard tech because there are a lot of semiconductors in the technology sector. So it's impossible for technology to be up here if semiconductors are down here. So the hard tech, not soft tech, that's Apple, Amazon, that's soft tech. Hard tech is not doing as well because of chips. But the fact that retail, QQQ, all of these are up here, that's a very, very strong market. When you see everything up here, all of these techs in here, that's a very, very strong market. So we have an engine, we have a train right now moving very, very fast. But the question is anything going to derail it? And the biggest thing that can derail it is this right here. The bond market, the bond market, the bond market. It can derail it. Nathan says there is a long tail on SPY followed by some upside, so maybe not too big of an impact. So far, it's not having a big impact at all. But yesterday's report didn't have a big impact at all till the market opened. Then it basically was moving in the right direction. And I was like, oh, this is pretty good. But the report yesterday wasn't even that bad. It was just as expected. Today, the report was bad. So I wouldn't be surprised. I would not be surprised if we saw some liquidation from funds. But remember, we have the end of the year. Funds don't want to sell right now. They're going to get bonuses. So that's why liquidity is. So we're in a very, very interesting pickle right now. We're in a very interesting pickle right now. Yeah, the US dollar is not hating this report. So again, we don't have much fragmentation with technology, but everything else is very fragmented. You can see here, Dow, blue chips are down the most. Interest rates, tech, interest rates, blue chips. You could see the Dow, most of the Dow's right here. Most of interest rates like retail, mid-cap, Russell, they're already up here. The Russell was very strong yesterday. So you've got technology, interest rates, blue chips. That means selling blue chips that are down like LEN, like General Motors, like Alcoa. Hey, I just gave you 3 stocks on my short list. Look what Rich just said, guys. This is a guy who's making 3 to 5,000 a day on average. You won't go wrong. Join A-Line. So here's the testimonials I got on the A-Line today so far. A-Line is the only program that I have not experienced a loss. Eagle Beagle freaking A-Line is a mind blower. Rich, you won't go wrong. Join A-Line. Those are pretty good testimonials. I like that. I know how to make A-Line have a loser. I'll drop 50K on your next recommendation. It'll sure lose. That's not funny. Please don't do that. Please do not do that. Okay? All right. My wife just wanted to tell me something real quick. All right. Let's see how the stock market's reacting. It's not. It's doing nothing. Guys, this report has no reaction on stocks, but look at bonds right now. Look at that. Up, and now right back where we started. So far, I'm not seeing any positive reaction, and there shouldn't be any. What about indices? The Nasdaq's down 121, Dow's down. So I'm not seeing anything good. And remember what I told you yesterday, Rich, about the market? Take some profits off the table. Remember, Rich? I know you're kidding, Kevin. I know. Peter, you don't have to worry about risk management because we tell you when to exit, when to enter. So there's no risk management. We do it for you. Okay. All right. All right. So let's do one last thing before I give you the stocks. Okay. Let's look at let's take a little temperature. Look at Nasdaq 100 right now, guys. So this should be eye opening to you. This should be eye opening to you. All right. 60% of stocks are trading above the 50-day moving average and the 200-day moving average in the Nasdaq. But Roger, the Nasdaq made an all-time high yesterday. How could that be? How can only 60%? Mags, this is what's driving the market to new highs right now. Mags, the Magnificent Seven. Look at RSP. This is the market, guys. A lot of you think you're trading this right now. A lot of you think you're trading this right now. But what you're really trading is this right now. Now, I'm going to do this again a few times. A lot of you are looking at the S&P 500 and you're thinking you're trading this right now. You're not. That's seven stocks. What you're really trading is this right now. That's the US stock market, guys. This is equal weighted S&P 500. Capiche? This is what you're trading right now. Unless you're trading FANG stocks, this is what you're trading right now. Does that look like a strong market to you? Does that look like a strong market to you? Why do you think I'm talking about shorting GE, Alcoa, GM? Do those sound like small cap stocks to you? Because the market looks like this. If you take away the retail, if you take away the XRT, if you take away the XLC, and if you take away the XLY, you get this. Is this helpful to you guys? Is this eye-opening to you? This is the US stock market, guys. This is the US stock market, not this. Okay. Just wanted to explain to you what's going on. Do you understand why only 60% of stocks in the Nasdaq are jiving? The market is not operating on all fours right now. Look at the Russell 100. This is the 1,000 biggest stocks in the world. Only 58 are above the 50-day moving average. Only 68 are above the 200-day moving average. S&P 500, 50% of stocks are above the 50-day moving average. 66 are above the 200. Do you understand that the eyes wide open? Good. Rich, do you understand why I wanted you to close your winners yesterday? And I told Rich you should close your winners yesterday. I did. I usually don't tell Rich what to do. He knows better. But I said I don't like what I'm seeing right now. We have a lot of red here. We have a lot of vulnerability. Please don't fall for the banana in the tailpipe. Okay? We have a lot of vulnerability. Matter of fact, look, last month, 63% of all stocks trading above the 50-day moving average. Now we have 60.85. So we're not doing that great. And I'm not trying to scare you. I'm not trying to scare you. I'm trying to, thanks, Daniel. I'll look at it. I'm not trying to scare you. I'm trying to show you. I'm trying to take the market apart and show you every little piece of it. Imagine you could take a human apart at any given time and look at the inside. You would see exactly where his vulnerabilities are. That's what we're doing with the market. Sorry, I didn't mean to get off tangent. All right, let's go to our stocks. You guys have a good idea. I don't want to bore you anymore with my craziness. By the way, look at MAG stocks this morning. Look at the MAGs this morning after the report. So if this has been driving the market, and if MAGs are doing this today, Should we be expecting a very strong day? Not in the morning. Is this helpful to you guys? Is this helpful to you guys? All right. Daniel wanted me to look at Autodesk. Since I got his email this morning, I'll look at Autodesk. So Autodesk is right now at the VWAPs, at the 8-day EMA and at the election day VWAP. What we need to do is, Daniel, we need to move above 312. If we move above 312, we'll effectively start filling in this gap. Also, volume is a little low. So the fact that volume is a little low and the fact that we can't, Brian, this remember what I caught yesterday, Brian? The A lines that don't work? Volume, Brian. Brian knows what I'm talking about. No volume, sideways, need to break out on volume, and then we'll start filling in the gap. All right. Let me give you my stocks. I'm going to go this quick because I got to get to work. I'll do the short side first, okay? Lennar, I know we've never talked about this stock before. DHI Horton, we've never talked about this stock before. Volume is increasing. It's supporting this move. Volume. See, Brian, volume. Uber. The fact that Uber is going down when consumer discretionary is going up is not a good sign. I would wait for the 8-day EMA. Hey, do you guys mind if I set alerts while we do this? Would you guys mind if I did it in real time? It would just save me some time, okay? Let's see. I know I shouldn't be doing this in front of you, but crossing up. Crossing up the 8-day. All right. Okay, cool. All right. So we got an Uber alert, CVS. I like CVS here. I'll put in a little alert at the 8-day EMA. 1 week. Crossing up 8-day EMA. I like CVS. Now, CVS, I would take as a breakdown if I can get a confirmation from volume. So just because I'm setting an 8-day EMA doesn't mean I'm going to look for a pullback. If it breaks down on volume, I may take it too. Good. Take notes, everyone. JNJ setting alert right at the 8-day EMA for 1 week. Now, I can't be any more transparent with you guys than I'm doing right now. I can't be any more transparent. The only thing I could do now is just like literally place the trades and just make you guys see that too, which I'm actually considering doing in one day. Backs. Set alert. Crossing up 1 week. If it's a VWAP, it's going to be for 1 day. Realty. Now, folks, realty. Remember real estate? Put the like button. Hit the like button if you like this. Real estate, interest rates going higher. PPI not doing well. Hello. Just a little FYI. Why don't we set an alert right here at 55? Breakdown alert on O for a week, and we'll do a VWAP alert. We'll do a double whammy. I'm setting it right at the 8-day EMA for 1 week. Let's see. FRO. Fro. Ooh, Fro's going up. Look at that. Now, remember, I haven't screened for earnings, which I'll do if I get an alert. I haven't screened for correlation, but I don't need to. I haven't gotten an alert yet. Crossing. I can't do any more than I'm doing right now for you guys. Sigma. Let's put a little Set alert. This saves me time, so I could do this here instead of at the office for myself. Breaking down on volume means I'm not looking for a pullback to the 8-day EMA. I'm just looking for it to break down on volume, which means if it breaks down further, I want to see volume. I want to see crazy volume. Or I'm just going to look for a pullback to the 8-day EMA. And I have these stocks written, so I'll be looking at them all morning today. Let me finish this. BCE, this one looks like a perfect 8-day EMA candidate right here. Folks, there literally isn't anything more I can do than what I'm doing right now, other than literally just placing the trade, okay? The alert is only good for 1 week. If it's a pullback, I usually set it for a week. If it's a VWAP, I usually set it for a day. I just don't want to clog up my alerts, Marlon. Hey, Roy, good to see you here. We got 523 people. Let's see how many likes we got. We appreciate you doing this. It's good to hear your explanation where you're setting alerts. Yeah, well, I'm literally doing it in real time for you guys. I can't do any more than this. Here's all my alerts right here. There, you can see I have right now a bunch of alerts set. Here's the ones I said this morning. And here's all the ones that went through, and I'll be double checking these today. Managing your alerts should be what you spend about 80% of your time on. All right, let's do the long side now. Now, I really like this stock, and I really want it, and I have an alert set on at the, here, APO. Where's my APO? Huh, I thought I had an APO alert. I'll just set it anyway. I like this stock a lot. Crossing down to VWAP. I really like this one a lot. This has been on my hit list for a while. Roblox, another one. A little too high. If it comes down to the 8-day in the next few days, I really like this stock. Thank you for being patient and just letting me do this here. Saves me a little time. Microsoft. Meta. CMG. Chipotle. Ha, I said it. Yep, I did had an alert on APO. What is doing now is worth gold, so go buy A-line. It is gold. It's coming, Greg. I just want to make sure it's kosher. I'm going to look at it over this weekend. It's a big document. PayPal. I have a little star next to PayPal today. Alert. You guys don't understand the level of gold I'm giving you right now. You really don't. I'm taking you inside my lab. PRMB net. No, it's too weak already. No. APG. No. Expo. Let's put it at the 15-day and see if it goes down there. So alert. CG. Let's set an alert at the 8-day. Okay. All right. So if you have a sector that is doing poorly and one of your longs is in that sector, do you hold off? It depends, Susan. If the stock is telling the whole sector F you, then I'm going to do it. Let me tell you that's a good question. I got to get out of here. I'm late. I'm more nervous about stocks that are so if you see every stock in a sector doing the same thing, it makes me very, very nervous because what you're seeing is institutions buying mutual funds and ETFs that have those stocks. What I prefer is I prefer to see that one stock in the sector gearing up and all the other sectors not doing anything. So I am much more likely to buy something in a sector where all the stocks are not doing much than I am in a sector where everything is doing something, because that'll give me a much better idea of whether institutions are really buying this stock or just buying the sector. Because if they're buying the sector, that'll go up and down with the market. But if they're just buying that stock and they're focused on that stock, that's a different story. Great question. All right, guys, I got to get out of here. Now, I am going live at 2 p.m., not at 1, at 2 p.m. today. I don't want you guys to miss it. Here is the link. The program we'll be teaching you is one that we have not had a loser yet on. Join my VIP room, please. It's happening at noon today. I'll be talking about psychological stuff, controlling your emotions, the second guessing yourself, and when to do spreads versus doing individual options. Which sectors they are buying. Anyway, guys, I'll talk to you later. If you have any other questions, email me, roger@rogerscott.com. I got to get out of here. I will see you later, okay? Bye, everybody. Have a fantastic day. Be really, really careful today. Be really, really careful today. Just be careful, okay? So far, things are looking really good. I like what I'm seeing right now, but we got to be very, very careful. And I'm not seeing FANGs contributing today. So this is what you're going to be trading today, okay? Bye, guys. Have a great day. I think we had one of the best sessions today ever. Bye.